Assalamualaikum warahmatullahi wabarakatuh, and a very good morning, afternoon, or evening, depending on what time you're watching this. And today we are going to be doing a presentation for our FIN 365 subject known as International Banking. And the topic of our presentation is the Asian financial crisis of 1997. Before we begin, allow me to introduce the members of our group. First off, we have Ahmad Ilman, Arif Hilmi, Amir Zarif, Muhammad Zahin, and of course me, Muhammad Uzair. And without further ado, let us get into the presentation.
Assalamualaikum, my name is Muhammad Zahim bin Shahrin. In this presentation, I would like to talk about the introduction of Asia Financial Crisis 1997-1998 in Malaysia. But first of all, I would like to talk about Asian Financial Crisis. The Asia Financial Crisis, also known as the Asia Contagion, began in July 1997 and spread through Asia. It began in Thailand when the government removed its currency de facto page to the US dollar, caused speculative pressure on the other nations, Malaysia, the Philippines, and Indonesia, follow suit along their currency to depreciate. The currency reached South Korea when a balance of payment issue threatened the country government. Strong economic fundamental and large foreign exchange reserve helped economy like Hong Kong, which has withstood several significant but failed speculative attacks. Next, for the financial crisis in Malaysia, the Malaysian economy is facing a unique crisis due to extended force threatening its growth plan. The crisis may weaken exploit development if it spread beyond the US, EU, and Japan. To address this, Malaysia must reconsider neglected sector and rebalance growth in line with national plan emphasizing domestic consumption and investment while not discontinue export and export related activities. According to the article discussed, the 1997 financial and economic crisis in Malaysia highlighted the importance of increasing domestic investment and consumption. The value of trade, government policy action, and potential economic recovery plan. The article concludes with remarks.
Next is the literature review section, where I'll be going over factors contributing to the Asian financial crisis of 1997. The first is we have excessive amount of capital inflows and rapid financial liberalization, specifically in the affected economies such as South Korea, Indonesia, and the aforementioned Thailand. Liberalization policies and the openness of their financial sectors to foreign investors were the main drivers of this capital inflow. Rapid financial liberalization combined with a lack of control and regulation created a climate that encouraged disproportionate borrowing and speculative conduct. This led to these nations seeing an increase in short-term financial flows and foreign direct investment, which resulted in a large buildup of corporate and external debt. Up next is the fact that the incredibly weak regulatory systems implemented by the government were unable to control the risks brought on by the quick expansion of credit and financial activity. The bank started loaning to businesses with political ties and participated in questionable lending practices, leading to the amount of non-performing loans to increase, which then caused the deterioration of the financial stability of these institutions. So the banking sectors were the ones that were severely affected by this whole phenomenon. And then there was the lack of corporate governance and transparency. Numerous conglomerates came to hold a disproportionate amount of economic power as a result of widespread cronyism and nepotism. These big corporations took on enormous amounts of debt and engaged in speculative operations, frequently using their political connections for their own benefits. Obviously, the underlying financial conditions of these companies were concealed by lax accounting standards and insufficient disclosure regulations, making it challenging for creditors and investors to evaluate the risk they were exposed to at the time. Lastly is the sudden reversal of capital flows and financial contagion. The depreciation of the Thai baht in July of 1997 was one of several incidents that sparked a crisis of confidence among foreign investors that resulted in a substantial outflow of cash. This caused investors to panic and adopt a herd mentality out of concern for similar weaknesses in other Asian countries, which was what caused this capital flight. Since banks and other financial institutions in one nation had substantial exposures to distressed assets in another, the interconnectivity of the regional financial networks worsened the contagion.
Hi, and I'm Ilman. For my parts, I will explain about the impact of Asian financial crisis 1997 and 1998. It happened in Malaysia. Okay, let's go further about the impacts of the Asian financial crisis. During the crisis, many countries were affected in Asia, such as Thailand, Korea, and including in Malaysia. The first impact is on industrial and manufacturing. During the crisis, Malaysia industrial and manufacturing resulted in significant challenges, which are contraction in export markets. As people know, Malaysia being an export-oriented country, there's a high-value manufacturing sector for economic growth. Other than that, Asian financial crisis resulted in a decrease in export quantities. It shows that this drop export demand had a direct influence during the Asian financial crisis 1997 and also 1998 on the manufacturing sectors, which resulting in reduced output and also revenue. Due to declining export markets during the crisis, industries in Malaysia such as automotive, textiles, and consumer products experienced serious challenges in maintaining operations. It also showed that during the crisis, supply network in the industrial and manufacturing sectors in Malaysia were also affected. During that time, cost of export will increase, which caused interruptions in the supply of inputs. Next, I will explain the another impact, which is impact on currency in Malaysia. The crisis is began in Thailand and quickly expanded to another country, including in Malaysia. During the crisis from middle 1997 to early 1998, the ringgit Malaysia value fell rapidly against foreign currency, especially the US dollar. It shows that the ringgit Malaysia lost over half of its value in a short period of time. During the July speculating attacks, ringgit Malaysia fell to around RM2.57, and by the end of 1997, the exchange rate had dropped to 3.77, and BNM wanted to show their effort to protect the ringgit in Malaysia to get decreased but failed. On the September 1st, 1998, the Malaysian government announced capital control in reactions to currency instability. The government set the ringgit exchange rate to US dollar at 3 ringgit 80 cents to 1 USD until remain in place 2005. Capital limits and fixed exchange rate system were implemented to stabilize the currency, restore trust, and prevent further devaluations.
My name is Amirul Zarif, and now I will present the impact of 1997 Asian financial crisis to Malaysia. Although Malaysia is not affected heavily like South Korea or Hong Kong during the crisis, but it is considered as one of the worst disaster happened in the history of Malaysia. 1997 Asian financial crisis caused Malaysia to suffer from bad recession. It is a contraction in the economic cycle. It means like the country suffered from a slow economic growth, economic instability, shrink in import-export. Because of recession, Malaysia suffered from a decline in GDP. According to data collected, Malaysia GDP rate during 1997 is at 7.32. After the hit 1997 financial crisis, Malaysia's GDP growth has been plummeted down to negative 7.36%. This is due to reducing production because of depreciation of currency. The next adverse impact suffered by Malaysia is an increase in unemployment rate. Recession causes business to make less and less profit. Thus, to save costs, to cut costs, they had to lay off some of the workers, which then will increase an unemployment rate. In 1997, Malaysia recorded an unemployment rate of 2.45%, but it jumped up to 3.2% in 1998. Usually, there is an inverse relation between unemployment and inflation, but this is an exception. 1997 Asian financial crisis causes Malaysia to have rise in both unemployment rate and inflation. In 1997, Malaysia recorded an inflation rate of 2.66%, but then increased by almost double to 5.27%. This will surely increase the consumer price index and also will increase the cost of living of the people. And because of that, the household income is also decreased, and this make people have less and less buying power. On top of that, government also lost tax revenue. Thus, they have less to spend to the public, to the people.
Assalamualaikum. For this part, I will explain about the conclusion and the recommendation. Malaysia was significantly impacted by the 1997-1998 ASEAN financial crisis. The crisis caused the Malaysian ringgit to fall dramatically, the stock market to drop, and the financial industry to experience considerable difficulties. The economy of Malaysia expanded more slowly, and unemployment rate increased, and investor confidence fell. The Malaysian government implemented a number of policy actions to deal with the situation. Capital controls were put in place in order to curb the flow of foreign capital and stabilize the economy. Extensive fiscal measures and infrastructure projects were started to increase domestic demand and support economic recovery. The financial industry underwent reorganization to strengthen banks' balance sheet, tighten regulatory frameworks, and enhance corporate governance. Malaysia's relatively rapid recovery from the crisis was aided by these measures, which included the contentious capital controls. The economy of the nation recovered, helped by more domestic consumption, a wider range of export markets, and investments in the industrial and service sectors. The ASEAN financial crisis served as a crucial learning experience for Malaysia. It demonstrated how crucial having dependable financial institutions, strong laws, and cautious economic management are. Economic experts disagreed about the success and long-term effects of Malaysia's response to the crisis, particularly the use of capital controls. The crisis effects in Malaysia had an impact on the nation's subsequent economic policies and growth plans. It resulted in a focus on developing a more stable and diversified economy, increasing domestic consumption, and lowering reliance on outside funding. Overall, despite the fact that Malaysia faced significant challenges as a result of the ASEAN financial crisis, the country's response and subsequent recovery demonstrated its resilience in the face of shocks to the economy. The arrival of the financial crisis in the country of Malaysia has caused several impacts that affect the country. The superiors need to take the action to overcome the problems faced by the country so that it can become more stable in terms of currency fluctuations. The government can find a solution by strengthening financial resilience. To improve the financial stability of the industrial and manufacturing sector, government must promote efficient financial management methods. The government also needs to support strategies for debt management, cash flow management, and risk diversification. This may help people in navigating their financial situations and facilitating their access to funding options during times of difficulty. The government can also find a solution by stabilizing the exchange rate because it can be one of the solutions to deal with the financial crisis in Malaysia. It enables the application of macroeconomic measures and prevents a potential debt servicing crisis, which can happen if the ringgit falls below a particular threshold. A stable exchange rate offers assurance and lowers market volatility for currencies. By lowering uncertainty and promoting investment inflows, this might help in restoring investor confidence, both domestically. The government needs to take measures such as regulating the flow of capital because it can be considered as one of the solutions to deal with the financial crisis in Malaysia. Capital flow control might help in preserving the domestic currency stability together with currency stability. It is crucial to remember that the government is bound by the laws of capital flow and should implement policies carefully, taking into consideration the unique conditions and possible risks.